Tax planning. Tax planning is very important in financial planning course structure. If you want to become a better financial planner, then you must know that what is tax planning. Tax is an important part, especially in India. Tax planning is very important. We will try to cover maximum topic into the tax planning. We'll try to cover this topic as soon as possible. Again, I'm repeating, in the entire financial planning module or in the entire financial planning course structures, there are 5 specific modules. Number 1, introduction to financial planning, tax planning, investment planning, risk analysis, then advanced financial planning. Already we finished introduction to financial planning. In introduction to financial planning, we finished basic parts, and that basic parts were very important from the financial planning point of view. Please try to remember 6-step process of the financial planning. Please try to remember the basics of financial planning, the basics of financial market, debt market, then analysis part, economic analysis part, and the regulations which is involved in the financial planning process. In the tax planning part, we will cover basics and the working of the Income Tax Act 1961, and with this we will cover planning part, because our aim to save money. So we are not here to read the entire Income Tax Act 1961. We are here to read the taxation from the planning point of view, from the saving point of view, because the basic motto of the financial planner to save money of their clients and to invest the same money to get better returns. So again, I'm repeating, in this course structure we finished first part, that was introduction to financial planning, and today we are starting tax planning. In a tax planning, there's a basics of direct and indirect taxes, basics of income tax act and rules, CBDT. Now what is CBDT? Central Board of Direct Taxes circulars and notifications, judicial decisions, Finance Act, definitions, SSC, assessment year, previous year, person, assessment, then steps, and then residential status. So these are the learning objectives. These are the learning objectives from the tax planning point of view. Now come to the basic part, that is called tax structure and overview of income tax law in India. Number 1, a tax may be defined as a pecuniary burden laid upon individuals or property owners to support the government, a payment exacted by legislative authority. A tax is not a voluntary payment or donation, but an enforced contribution exacted pursuant to legislative authority. Indian taxation system has a 3-tier federal structures. Constitution of India empowers the above 3 bodies for the imposition of the different duties and taxes which are prevalent in the country. 3-tier federal structures are nothing but union government, state governments, and rural and urban local bodies or municipal authorities. So if I'm saying that union government is a central government, that is called Delhi. State government, there are different state government in India, like government of Maharashtra, government of Rajasthan, government of Gujarat, and local bodies, that is called municipal bodies, which is coming in different states. Say like for a Mumbai, there is a Brahan Mumbai Municipal Corporation, which is called BMC. Taxes that are levied or charged by the Indian government are mentioned below. There are different taxes which is charged by the Indian government, that is called taxes on income other than agricultural income, duties of customs including export duties, duties of excise on tobacco and other goods manufactured or produced in India, except alcoholic liquor for human consumption, then corporation tax, then taxes on capital value of assets, then estate duty, then duties in respect of succession to property other than agricultural land, then terminal taxes on goods or passengers, then taxes other than stamp duties on transactions in stock exchanges and future markets, then taxes on the sale or purchase of newspapers and on advertisements published therein. Then taxes on sale or purchase of goods other than newspapers, where such sale or purchase takes place in the course of interstate trade or commerce. Taxes on the consignment of goods in the course of interstate trade or commerce. All residuary types of taxes not listed in any of the three list of 7th schedule of Indian Constitution. Service tax. So these are the different types of taxes which is charged by Indian governments are mentioned below.